like we had interacted last month also, so nothing much has changed. But again, would appreciate if you share your thoughts.
So frankly, I don't know what is happening, to be honest. I mean, in the sense that, this is a market which is basically, I think it is, in that sense, there is not much of a trend as such. Of course, specific sectors and stocks keep on doing their things, but uh, what I would actually love right now is some cool off, which I think last month we had one day of this thing, a good shakeout, but then immediately, in the next couple of days, everything had gone up and then we went higher. So it's a very tricky market, and it's hazardous to guess anything, to be honest. But you know, uh, one if one has to invest in these kind of markets, one has to have a quite a long-term bet. Uh, at least have a 2 3 year view, and I think my advice remains the same, that be careful of what you are buying at what valuation. Uh, just avoid narratives, avoid stories, avoid paying up too much. Uh, and if you pay too much, you know what is happening to a lot of these, a lot of these quality stocks, super quality stocks, to be honest. Uh, Many of the stocks did nothing for last 2 years, 3 years, kind of. So those could be the outcomes, even in quality stocks. So uh, the outcomes in small and mid caps, the not so quality names where you pay very high, the outcomes will be worse than that. Here you are having no return, but you are not losing capital. But there you will lose significant amount of capital. So be very careful, is what I would say. Uh, you know, I've always had ideas, to be honest. Whenever I want to invest something or the other, at least you know 5 times stocks will be on my radar, that these can be bought and so on. But that list is day by day getting uh, smaller and smaller, and whatever, even contra, if I want to buy anything, uh, you know nothing is, let's say I start buying something and my style is to slowly add, but the stocks just run up before you even buy even 25% of your intended quantity and so on. So these things are happening. So it's a tough market for value investors, to be honest. Not from a return perspective, but from ideation perspective.
Right, sir. So lately, sir, I was also asking about the sugar thing. So we have seen in the things which happened in the sector as a whole in last 1.5 months. So although, as you were rightly saying, that nothing has materially changed and things will settle down. But again, broadly, like how you see going forward, be it the limitation on export of sugar and the skewed quantity of crop produced in Karnataka and Maharashtra. So in sync with that, and officially, especially we were discussing that the companies which has exposure to UP are likely to do better in such cases.
Yeah, absolutely. I mean, I think this is one sector where sentiments are ruling rather than fundamentals, to be honest. I think fundamentals are good and they are going to get better only, is what I think. It is one of the sectors where I still find, value. Buying some of the stocks are really at good valuations, which I like. And so I'm kind of continuously adding into that. That is one of the sectors which I'm buying into even now. Almost daily, I keep on adding something. Uh, Nothing has changed. Sugar prices are higher, as I had said earlier also, that uh, it will not make sense for the sugar companies to use cane juice for ethanol because the sugar realizations are higher than that point of 37 rupees per kg. So, uh, any which ways, I don't think there is anything wrong fundamentally with the sector. And shortage of sugar always brings, bonanza. Uh, and with UP, it's a bonanza because UP has good crop and overall crop is down. So if prices go up, volumes will not go down for the UP mills, and realizations will be higher. So they will be able to do much better, is what I think.
So in such cases, sir, when a person, I mean, say hypothetically, if say somebody is positive about the sector, but individually not aware that which companies to pick and choose. So basket approach as a whole would be a suggestion in such cases, or like how one should go about playing that sector.
Yeah, I think a basket approach is better unless you are very, very sure. Uh, I've always had the basket. Uh, Previously I've always, when I knew far lower than what I know now, I used to use a basket approach. Now I'm uh, having fewer names, to be honest, because I do have a very high conviction on the names, which just a couple of names which look good to me, and so that can also come with some uh, once you understand the sector a bit more and you keep on learning over the years and so on. But I think for most, a basket approach will be a better one.
Right, sir. And sir,
And
the
also one more
CNC
thing I want to
company.
add that I think till elections, all this sentiment might not change too much or something. Post elections, I think the sentiments will change, and uh, then is when I think we should see sort of good, hopefully good prices for the stocks we own and so on. So it could be, you might have to wait for some time, and that is the reason I'm just keeping, adding slowly. Uh,
Fair point, and we all know that sugar prices are obviously linked with the voters and be it the farmers growing. So definitely. So coming to the CNC space. So by any chance, sir, you have had a look at the companies in the CNC space. Obviously, the valuations are crazy at this point in time. But to understand the space, any view you keep around the CNC companies, Jiten sir?
sorry, I was on mute. I had studied the sector. I had looked at a couple of companies there. One company I had, met them also and kind of liked them. Uh, but before I could act, just stop, went berserk. And to be honest, it's a miss for me. I had done all the work. Valuations were good, but then somehow I missed it. And so, yes, that happens currently. I think there is IPO, but I don't think I like the valuations, to be honest. Uh, but then you never know what happens with IPOs.
Right, sir. And obviously, the valuations are crazy and in sync with the upcoming IPO, the company, if I remember the name, and obviously that has done tremendously well in last few months. So definitely not a good time to add. But sir, as a space, you see this will ought to do good in sync with the like growing infra and manufacturing, right?
Yeah, I think that will do. I mean, overall, I think manufacturing should do well, is what I think. So, manufacturing engineering will do well, is what I think. So that is, but then unfortunately, what is happening is for someone like me who wants to buy at value, it is becoming difficult. So right now, it's a test of patience, to be honest, for me also. I'm not into cash, but I'm not into meaningful cash. I would rather say that. But You know, uh, if I want to sell something, I'm not getting any ideas to buy, to be honest. And a lot of places is where I am uncomfortable uh, at the prices where the stocks which I'm holding, the prices, the valuations, and I am trying to apply reverse stop loss and all that and keep on riding and moving the reverse stop loss higher. So just to maybe maximize. But there is discomfort in holding some of the names which I hold also purely from valuation perspective, and not moving out of them could also be due to lack of other opportunities. So, uh, uh, so one has to be, as an investor, one has to acknowledge that what you are holding could be expensive. That groundness should always be there in investors. It's a behavioral trait which I think everybody should acquire.
Right, sir. And sir, another segment which is the EPC, which has seen consolidation happening, and many companies face the brunt of the consolidation which happened. So the EPC companies also, I mean, if you talk about the valuation, so they also do not provide comfort at this point in time. But broadly, do you see after such consolidation, this segment as a whole would do good? Sir, you are on mute, I guess.
By EPC, you mean by the infra companies or something? Is that what you're
Yes, yes,
talking
yes,
about?
yes.
So I still think there are very fair valuations in the infra companies. It's a sector which has not done well of late. I mean, all many other sectors have moved, but these sectors have not moved. A lot of these companies are available at very decent valuations, at least the ones which I track. And in fact, I added into one company which I hold from one third levels of what it is now, and I have added now also because valuations still are very decent. Uh, but I think what is bogging them down is a lack of order flows. So book to bill is not very comfortable in many companies, but you have to understand that I think post elections there will be a slew of orders, and uh, I think that it is one sector which will do well post elections.
So, sir, when
So
we talk,
companies are available at 7, 8 EV to EBITDA, 10 times earnings, kind of, which are very very decent valuations to even add at this point in time.
so sir, specifically when we have a look at these engineering, procurement, and construction companies, so what we should ideally be looking at? I mean, so as like if one has to study or research about a company, so what few points or things we need to take care of, like before deciding whether this is investable or not?
So one is, I would like companies which have a history uh, of operations for a you know for a good amount of time, have seen cycles, and who have manageable debt, who have delivered their projects on or before time, uh, and basically also look at companies where so when you talk to whenever I talk to infra companies, I will always ask them, uh, who do you admire from your competition? Uh, and most of the times, managements are quite honest, and they said, yes, this company is doing good. And so, you can always cross check which companies are doing well from the ones you hold and so on. Most managements, if you have, uh, basically build a rapport with them, or they will tell you. Uh, and those are the companies to invest into, provided all these other things check out.
Right, sir. So Ravi and Vajpayee ji, just in case you have any questions to sir, you can surely feel free, or
So,
maybe
Prince,
yeah.
I
Yes,
will
sir.
need to go for some time. This thing, I will join later. So maybe
Sure, sure,
another
sure. Ha ha.
15, 20 minutes is probably I'll be off. And
Sure,
I will be
please.
listening, but I'll not be able to speak.
No issues, sir.
Yeah.
We'll
Sure.
love
Okay.
to like have you again. Thank you
Sure.
so much for your
Yeah.
insights, sir.
Okay.
So Ravi and Vajpayee ji, so we listened to the thoughts from Jiten sir. So obviously we were talking about the summit happening, and so Ravi, you have been I mean looking at the renewables and solar space closely. So in sync with the summit happening, anything substantial happening there, or I mean that is not the talk of the town in this summit.
Really, thanks again, Prince. I just got back to New York from India. It was quite an amazing trip. But just to answer your question, I think the whole, you can see the look and the feel, right? I think on the renewable side, you see very, very clearly that there is completely a very important, I would say, a push and a recognition that it's no longer just a dream or a fallacy that India will become the renewable energy capital of the world. And having assessed the space, I've been working on the space for a very long time. And if I just tweeted something about, or just on MBS from Saudi Arabia. If you go back to his Fox News interview, where he talked about that in 20 years from now, and that's linked to the statement about 35 trillion economy that Mukesh Ambani made today, right? So how do you really kind of compound and reach that particular time? Green energy is going to be very, very critical. So just to say that if MBS from Saudi Arabia makes a prediction and says that 20, 25 years from now India will be exporting the biggest piece of green hydrogen through the IMEC, and into Saudi Arabia and then to Israel and Greece and so on and so forth. That's something which really for our future investors is to really look at and understand what it really means. Similarly, we're seeing the huge rise and increase demand for solar, not only in terms of manufacturing but also installation. And there is a very important piece happening in Latin America, North America, and Europe, where they're saying that we do not and cannot rely on the Chinese-made solar panel, mainly because of the spying and the data uncertainties linked to that particular piece. Now, the piece which is very interesting, and I'll be very interested to see which companies really come in, is biofuel, right? Because I think India kind of got a hat trick in the international Biofuel Alliance to really look at that as a future capital. We've been working on Goba gas and many other aspects, but nobody really thought that India will be able to bring together the whole global community. So really understanding the energy need. We cannot overnight become. I do a lot of work on environment. We cannot realistically suddenly go move away from oil and gas, but we need to look at an incremental or a 50-50, or look at the ratio that works very well. Ethanol is another great example of what India has been doing and how it's been increasing its in terms of infusing that into regular consumption. So I would say that there is a this is absolutely euphoric. I think we will see some very important points. This is just happening right before 2024 election. I think both India and USA have a very, very critical year. India is looking very great. We don't know what's happening here in the American economy. There are lots of in and outs. I was in a very interesting discussion with somebody who's doing solar. The only thing they talk about is how can we work with Indian companies and how do we move away from China. So just that was just a very quick. Maybe we need to get into a deeper dive, Prince, on the renewable and piece later in the coming weeks. But it's looking very, very solid. I think you and I discussed when we met in Delhi that I already feel that there will be a very strong move of the Indian Stock Exchange becoming a global center in the next 10 to 15 years. You'll see that people looking at, of course, Hong Kong, but now there's a more focus on coming to a BSC. Very, very bullish, excited. And I only joined a little later, so I'm sure when we come back with Jiten ji, we'll be able to hear more. So over back to you. Thank you.
Thanks for your quick inputs, Ravi. And Ravi, like these days, I was reading about the coal gasification with carbon, right? And even at the COP28 event, which happened in Dubai recently, so India didn't sign that, and even the companies of the likes of Coal India has done tremendously well in the past. So any sense around this coal gasification theme, or you are yet to have a
Yeah, the China 30 years ago, when it started moving forward, no economy can move, or no manufacturing can happen unless until we have a very clear and a very sustained, committed energy backend, right? And of course, India has a huge, coal deposit. So it's all the environmentalists will come, and all these countries in the West will say that you can immediately move away from chrome, but it's not easy for an Indian economy. And there, it's important to know that the leadership since 2014 has been very, very clear that they made a very clear commitment to the Paris Accord. They made a very clear commitment to the Sustainable Development Goals, and so on and so forth. But they've said very clearly that there will be an incremental move towards net zero. But for us to have these 1.4 billion people who will be not only critical for in terms of energy dependency, but are also critical for now for the world's manufacturing base. So we cannot overnight say that we will look into gasification issues or issues of goal or carbon capturing. So we need to find a innovative solution. So I think there has been a lot of hesitance. So you'll have to see it. It's almost like balancing that act, right? While you are looking away from slowly, incrementally moving away from coal, oil, and gas, but at the same time, India has been very, very, I would say, futuristic by completely. I was at the White House summit, right, with Joe Biden ji and Modi ji, right. So that was very interesting because the number three point in the White House declaration was green growth. So we see that very clear commitment. So I think for us, Coal India, many others, you'll see that it'll take some time. But eventually, yes, there will be a time when people will look at other ways by which you can, like you look at this entire amazing work coming out of, I think, one innovator in Roorkee who's managed to now create these carbon capture bricks, which can be, used for 500 years. They kind of capture that. So there we will look at a lot of innovation come into space. I think the renewable energy and sustainability is a huge area, and that's the focus has been of the India 2047. We really look at this investors forum where we look at all the innovators, investors in this particular space. And I think India will become, and I always said that, and you and I met and the group met, I've said India will be the epicenter of the innovation and renewable energy space. Thanks.
Thank you, Ravi. So for those like who are like yet to read this gasification thing, so basically there was an expo which happened in November 2022. So there is a very good report of Gasification India 2022, and those who had timely access to this report must have invested in the companies which are the beneficiaries, and the companies which used to be like a total avoid by the majority, and they had I mean multiplied the money of the investor 5-10x in a very short span of time. Again, no recommendation by any means, but this is one thing one should be like, at least for understanding the theme, because and they are like shifting coal from an energy commodity to a chemical feedstock. So interesting, and you'll also find a thread on value picker. So definitely that could also be a great value addition, whosoever reads it. So
Sorry,
Vajpayee ji,
can I,
yeah,
sorry, can I add one point? I was in
please,
a
please.
meeting on Monday with somebody who's leading the climate action, net zero support to all these companies in India. And it was a very interesting conversation that the whole requirement by the Companies Act and many others, where it's becoming more and more strong. But the interesting thing is, unlike USA, the commitment in India amongst CEOs and CXOs is much more stronger, then I see that here in America, which is quite an interesting thing. So I just wanted to add that. So on your point about gasification, I think it's an interesting piece to watch, and people who are interested, maybe we'll do a deeper dive into it for folks who want to understand the space. Of course, without making any recommendation, we can bring some folks who are in the space, some CEOs and CXOs, and understand what they're doing and how they're doing it, without again making recommendation. It's definitely a growing area, and definitely a huge opportunity for many of us.
100% Ravi. सो हमारे बीच वाजपेयी सर भी हैं. सो वाजपेयी सर ब्रॉडली लेवल्स वगैरह टेक्निकल बेसिस पे देखते हैं, तो थोड़ा उनसे आइडिया लेते हैं. सो वाजपेयी सर, आपके मार्केट के लेवल्स पे, इंडेक्स लेवल पे क्विकली अगर आप बताएं तो क्या लग रहा है अभी यहाँ से मार्केट थोड़ा ब्रीदर लेगा, ऊपर जाएगा, नीचे जाएगा? क्या लग रहा है आपके टेक्निकल बेसिस? I think some voice issue on his side. So I also see Amiya and Ravi Bhandari bhai. So just in case you guys have some time, so you guys can chip in. Although you had shared your thoughts in a session dedicated on IT sector recently, so definitely the audience which are yet to listen to that conversation can listen that over my YouTube channel. Then, so I mean, I am yet to like listen or go through the summary of the summit which is ongoing. But again, the main pointers which had been highlighted by Mukesh Ambani, obviously, there is nothing new, and praising Modi has become the new normal because his vision and execution skills are definitely making us I mean, grow on all the aspects, and we definitely look forward. Obviously, not a political spaces, but again, the willpower of or the execution of the current government appears to be in prospects of our country, and definitely look forward to that. Thank you. So, Nitin sir, we were discussing broadly about the market outlook. So, we had insights shared by Jiten sir. So, and also request you like broadly if you would like to share like how you are seeing the market at this point in time and how you are placing yourself. Obviously, Jiten sir and you more or less had the same thoughts, but again, would love to hear out from you as well.
I'd come actually to listen to Jiten only, but I guess I got late. Okay, so in my view, almost remains the same. What I'm sure Jiten would have said. Whenever the markets are going up, uh, they start rewarding you disproportionately as well. But it comes with risk, and we need to keep that in mind. We need to be very stock specific. Also, if possible, wherever there is a discomfort in the valuation for sectors or stocks, we should try to start rotating them. Okay, and entering into the sectors or stocks which are not considered currently very favorably by the market and investors. So that rotation should happen, and it is a continuous process. So it is not a static one and dependent only on the market conditions. And in every market, we get opportunities in the sectors which might have been ignored, or where there is a possibility of re-ratings happening in future. The stocks or industries which are currently going through pessimism. When the strong bullish market is there, is currently the scenario, the number of sectors or stocks which are going through pessimism may reduce, but it doesn't mean that they are not there. They will certainly be there. We may have to work little hard. So that's where my position is.
So, sir, like there's a company, obviously naming company is not important. Understanding the thought process is very important. Say, some XYZ company had like given a guidance that they'll have a big order lineup with one of the client, and that is like span across say 8, 9, 10 years, and suddenly some point in time it the news comes like that that project will no longer be in place. So as an investor, how one should be like analyzing that and placing himself or herself uh, if he or she has position or maybe thinking of considering that as an investable company?
Yeah, so what I would say that we should not be, investing just based on the order books, you know, declared in the market or disclosed in the market. That is not the way. Otherwise, we have seen what has happened in
previous cycles. So we have the experiences, say, for example, from the period of 2008-9, when a lot of these companies were declaring a significant increase in their order book, whether they were infrastructure companies or power sector related companies, capital good companies. So we need to be a little careful about the order book. We should not take them just on the face value as they are getting disclosed in the market. We should also see the sustainability of the valuations of those companies.
Right, sir. And sir, do you have like any sense around this coal gasification with carbon? I mean, this has been the talk of the town these days, and the companies associated had done good considerably.
No, no, I don't have any views right now. I won't be able to share that.
Right, sir. Sugar we already discussed with Jiten sir, so I think you have a similar. Yeah, Jiten sir, please.
Yeah, sorry, I'm back. So I just wanted to add to the question you had asked and what Nitin has replied. Now, regarding, I know uh, what incidents you're talking about, to be honest, and you have to see how much of a material difference it will make to the company if that particular order would have come or got cancelled. Uh, so you have to assess the impact and not just the news. If an order is for, let's say, maybe less than 5% of revenues or something like that, it might not be a very big impact, to be honest. So that assessment one needs to do.
Right, sir. Thank you. And Jiten sir and Nitin sir, like lately there was some news around evergreening and its impact on the AIFs and the NBFCs. So, would you like to talk about that? Any sense around that, if you would like to?
So evergreening and all that, has been happening for ages. Many specific incidences, people would know, especially who are from the field or who watch that closely. Uh, now, again, a lot of times it's a leap of faith, also in the sense that, how big is it? That's what you have to see uh, and assess. So, for most companies, it might not be, a material impact by that if that were to blow out and so on. But for some, it will be. So that's that assessment you have to do basically. But evergreening has always been happening for very, very long time, and that's the unfortunate reality.
Right, sir. And sir, like there has been some movements in the textile sector. So, has anything changed materially, or it's on the aspect of the free trade agreement which has been talked a lot and which has not yet finalized? I mean,
So that's what I mean. Without finalization, things are moving. So again, I don't think I think the environment is not very good, but still, stocks are not correcting. As I had told you last time also, uh, unfortunately, uh, you want to invest in a sector which is facing a tough time, but then valuation just does not become favorable, and that is happening with many sectors, to be honest. And I think Nitin also mentioned it that the investable uh, universe keeps on shrinking in this kind of market, and we are seeing that, to be honest. There are lot many sectors which are actually not doing well, and we would love to invest there, but then valuations have not corrected enough uh, for us to have that margin of safety. Because when you invest during pessimism, you need to have you need to be sure about the valuations, because you never know how long the pessimism will last. Classic example is of recent times is chemicals. I think all of us, I mean many chemical analysts and me too had expected that things will improve from this current the last quarter Q3, but looks like it will elongate a bit more. So all those things can always happen when you invest in pessimism that cycle down cycle can be longer and all that. So there, the only savior for you is that you if you have invested at uh, very good valuations. Uh, Otherwise, drawdowns can be big. So that's the problem. Uh, we are having currently when you want to do contrarian investing or investing during pessimism. So very few sectors where actually prices are what they should be uh, based on the pessimism in the sector. To be honest, very few.
All right, sir. Nitin sir, you were also saying something.
No, no, I totally agree uh, with Jiten, and he rightly pointed out how rally has happened in chemical sector. uh, the the positive turnaround in the chemical sector may not be immediately visible, may take some more time. However, what used to happen earlier, re-rating or whatever we say, say for example, if it is happening 6 months ahead of the time, now it is happening quite early, or the time duration from the time of re-rating and the actual results may be little longer, or maybe sometime away, but still the stocks are moving quite rapidly. So we need to be sensitive about such facts, and we need to be little careful while we are committing fresh investments in any of the sectors wherein the re-ratings are happening, because there is a lot of liquidity in the market, a lot of money is coming. If you see, if market is down, say for example, a couple of weeks ago when the market was down, nobody anticipated that in one day it will turn around and it will start moving up again. And it's all because a lot of people are sitting on the sideline and they are having cash. That is one of the guess that I have, and people are committing fresh capital in the market. So a lot of money is available, a lot of hope is there, and whenever such things are there, and in bullish market, if we make mistakes in our investments, in selecting stocks, and if we are reducing the quality of the companies, or if we are compromising on uh, on our process, then it can come very hard if things turn around, and nobody anticipates, and nobody can predict that. Nobody could predict that in 2008. Nobody could predict that in 2001. Nobody has done that in earlier, bull cycle to bear cycle. Nobody can do that. At least I cannot do that. So if you can't do that, if you assume that, and if you are committing fresh capital in such environment, it can come hard if any negative things come in your way. However, on the other side, if you start withdrawing rapidly, and if market moves up, then again there will be a problem, because you would be losing a lot of upside from the market. So on both the sides you have risk, and you need to balance it out. So while committing fresh capital, you still need to be very careful. You should not compromise on the quality of companies that you are identifying and selecting. It should not happen that you end up selecting a lot of crap in your portfolio, because that is one of the downside of the bull market. Because everything moves up so rapidly, you just don't get time to evaluate properly. And if that happens, and if there is a compromise on the quality of the companies that you are selecting, you may end up regretting later. People do not lose, as I often say, that people do not lose money in in bear market, they lose money in bull market. It's very difficult to comprehend, it is not very intuitive, but if you see, and if you have gone through the cycles, market cycles, then you will be able to appreciate that such crap and such low quality companies enter into the bull market in your portfolio, and they remain so subsequently, because nobody knows that when it is going to end, and when it ends, it's difficult to take exits from such companies, and we end up losing a lot of money during that period. Most of the money which we see in our portfolio remain paper money or paper profits. So that is the risk we carry during such times. We need to be very careful while committing fresh capital in bull market.
Totally agree.
So,
So,
Prince, to add to what Nitin has said, he made a very pertinent point about losing money and making money. To add to that is that you sow the seeds of your future winners in bear markets, and you sow the seeds of your future losers in a bull market. Uh, that's what happens when you, because in this kind of markets, see, typically for any serious analyst or something, uh, you know uh, if you want to analyze a stock, do a deep dive and all that, I think it will take weeks or months, to be honest. Unfortunately, such are the times that if you do that now, uh, before your work is done, the stock would have already moved 30-40%. There is a high probability of that happening, and that is happening with us lot of times, and we don't mind missing those. I mean, we, of course, you feel that you've done the work, but you still can't invest. But that's what basically, as an investor, you have to live with and accept in these kind of markets. But I think a folly would be to compromise on your process and jump in without doing your work. So that is very important. Another point I think Nitin also made about, chemicals, and there's another sector which I think I have been tweeting also, and I have written also, that is absolutely not doing well and is in a down cycle, is polyfilms. Now, somebody can do that exercise. I know that just from experience, that in this market, despite, uh, basically companies not doing well at all, they are probably going to have the one of the lowest margins they've had for years. Uh, Companies which were doing 20% margins are going to do 6% margins and so on. Maybe even show net losses and on. But stock prices have not corrected meaningfully. In a previous cycle and in a normal market, these stocks would have been, at least 50% of what they are at now. But that is just not happening. And that is true with many sectors. So that's the challenge you have uh, adjusting in these markets. Now, what do you do? Would you still go and invest? No, I think that's where your patience comes into play. Uh, Stay with your process. Don't mind losing out. Opportunities where you will regret in the future, because as Nitin also pointed out, you never know when the tide turns. Everything. So currently, I've seen that corrections nothing in the market. Uh, uh, when nobody is expecting, then only then corrections are coming. And currently the conditions are such that everything looks perfect. So you never know when correction comes. Uh, so if a severe correction comes, you should be ready. That's all. I mean, you should be ready, not with cash but with ideas, because cash, a lot of people say, I don't have cash so I can't invest. I don't think that is true. You can always recalibrate your portfolio. You will always have placeholders, proxy to cash kind of companies in your portfolio, which you can move out and invest in the stocks you like, which have corrected 30-40% and so on. So that kind of process investors should have.
sir, I tell you, like in today's newspaper, the Economic Times, there was one advertisement, walk-in interview for an option trader. So, so these are subtle signals which can tell us the kind of euphoria is there in the market. So, anyways, so sir, I mean, the oil, gas, metals, mining, these are like, I mean, people are started talking about it, and even there are movement in these stocks. So, is it good time to look at these companies, or how you see these particular spaces, Nitin sir?
So I think if you see, a lot of mining companies have already done well. I mean, though you see the prices of the underlying uh, ore, stocks have already moved up a lot. So a lot of re-rating has happened. There are some metal companies, ferrous, I think, not. They also have moved 30-40%. Uh, Now the thing is, when you buy these kind of companies, you need to buy. There is a lot of margin of safety. Unfortunately, you're not getting that, to be honest. And I think you will see me complaining all the time I talk that you're just not getting the valuations you want, or you are used to. Now maybe we have to basically realign to the new normal. I don't know, but I will still wait for some time before you have to adjust, and you know I would really not want to do that. But then in the future, if there is a there is a change which looks permanent or something, then one has to maybe tinker a bit. But still I will still want to stick to my process. And I have no regrets in that sense that basically I am invested and the stocks which I'm holding are doing well, so there is no need for me to jump out of one and move into another where I have no comfort. It is better to stay with the known devil than try to go with a non devil.
Right, sir. Nitin
Absolutely.
sir.
And it has not happened that these stocks have corrected actually. Some of these stocks have doubled or maybe gone up 50-60% in no time. So making a case to invest in such companies, wherein especially you're talking about mining or maybe steel or maybe metal companies, they require some significant correction, or maybe I would say that significant margin of safety should be built in those companies before we consider them from investment perspective. So again I am using the same phrase, committing fresh capital in such companies. If you are invested at lower levels, no problem, but if you are committing fresh capital, then you need to be very sure about the future growth possibilities of such companies. I'm not too sure right now, so I would be a little careful while committing fresh capital, especially if the stocks have rapidly moved up in such cases.
And also, sir, one space which comes to my mind is logistics. The companies which are into these sectors have done pretty well. So, I mean, is it like more of a narrative driven, or something has substantially changed in this sector which has led to? Obviously, this sector has struggled as far as margins were concerned. So, what's I mean, if you have tracked the sector, any views around this sector, sir? Nitin sir,
No, I am not tracking. So maybe if Jiten has any view, then he can share that.
Jiten sir, you are on mute.
Sorry, I received a call, so I have not even heard the question.
So question was around the sir logistics center sector. So this sector has done pretty well in last few months, or maybe a little longer period. So anything changed in the sector, because the economics of the sector and the margin profile appeared to be not so conducive.
To be honest, I have no views. I mean, I have not found anything, to be honest, where I could invest.
Right, sir. So, last sector which I would be asking question on, and if you guys have any more time, sir, so definitely our audience can ask few questions as well, depending. So, cement sector, sir. When we last spoke about it, so you were telling about that there is no, I mean, at least in the near future, you were not seeing any oversupply in the sector. So the status quo is similar, or on the supply side things have changed. So overall, the view around
No,
cement sector.
I think equilibrium is there. I mean, capacity utilizations probably will not improve, but they will not, uh, you know, uh, basically degrow from here also. So I think we are in fine balance. Uh, I think it is a sector to stay invested in. A lot of the stocks have actually moved up quite a bit. So I would not suggest fresh capital to be invested currently, but if you have them, there is still some more juice left. At least the ones which we have, uh, quite a few of them have actually doubled and uh, so on. And specifically when your risk is low when you buy, and anything doubling, I think that's a good outcome. Though still, people are not happy with doublers in, let's say, 1.5, 2 years, uh, because nowadays people are expecting doublers in 1.5, 2 months. So, and that is happening unfortunately in many stocks. But then you also have to understand the risk, and that's why I always say, you always have to measure your returns based on risk. So risk adjusted returns is a very, very underrated concept. People don't understand that. You also have to see how much risk you're taking with your capital. uh, it is very, very difficult to measure, but I think with experience you come to know that, in this particular position I'm taking, my risk is, let's say, 15% or 20%. So something like you, and the reward, if it is 100%, it's a great ratio. I mean, 1:5, it's a great ratio. Whereas with some others, if the stock has the potential to double but can also correct 50%, the risk reward is just 1:2. So it's not a very good ratio compared to the other one. So that people have to understand. uh,
Right, sir. And Nitin sir, you had just pointed out a very important concept of portfolio rebalancing, especially in times of euphoria. So, I mean, the moot point here is like we struggle like what to sell, and what to add in such a situation when we have two similar investments. So, I mean, broadly, when we go to portfolio rebalancing, how we should approach that so that we do not end up making mistake in the sense that we have some compulsory rebalance.
See, it all depends on individual to individual and their risk, appetite. However, as a general thumb rule, what we should do is avoid the sectors wherein a lot of euphoria is going on. Okay, so when I'm saying a lot of euphoria, wherein stocks have gone up multifold, or the valuations have stretched, and they can continue to do so. I remember year 2000, when in IT sector was in that euphoric zone, and during 1.5, 2 years, it has the stocks have given multi-bagger returns. uh, for example, Infosys has gone up from a few thousand to touching all-time high of 18,000 and those kind of levels. And then it took significant amount of time. The time correction was huge, almost 20 years before it touched the same level. And Infosys was still a better managed company and could come back to those levels. But there were many others which did not see the light of the day, and many of those died. So when such sectors and companies are going through a euphoric phase, and you'll understand that when you see the stock price movement and the madness for buying those stock shares. And if you are holding them, then you what you can do is you can exit them on a gradual basis, and avoid taking fresh entries in such sector. And that is purely from the fundamental perspective. There can be technical views or different views, which I would like to go into because that is not my area. But my area is fundamental. If I am not comfortable with the valuations, I would be very careful in committing fresh capital over there. While doing so, if I have any other opportunity available in the market wherein the valuations are at comfortable level, or if those sectors are neglected by the market, which are very few right now in the current market scenario, even if those sectors were there, they have also gone up, those companies have gone up. But if we get those, then make those fresh capital, or the profits that we have moved out of the euphoric zone to the pessimistic zone kind of industries and companies. So that is the balance that we have to take, and that has to be fine balance. It may not be immediate, taking money from one sector and committing to the another one. May not happen immediately. It can happen over a period of time. It can happen gradual. We can do it after some time. We book the profits from one sector, wait for some time, wait for some corrections in those sectors, and if we find good companies, we commit those. While doing so, we should also be sensitive about the companies wherein corporate governance issues are visible. So if we are having such companies already in the portfolio, and if they have also gone up, and I'm sure that some of those must have gone up with the euphoria in those sectors and market, we need to be little more careful about booking profit in those companies. We need to be a little aggressive in taking money out because we don't know what will happen. If corrections come, they come very hard in those companies, whether it is Silver Line or Rolta of year 2000, and those prices never come back. So we may end up losing a lot of money also there.
A quick follow-up, Nitin sir, although like you guys are into like bottoms up approach and individual company specific, but again, you said there are very few sectors. So if you would like to point out any names which you think are in that zone which are ignored or maybe can be seen that value in the sector as a whole is comparatively better in comparison to others.
So I would like to name because there are some sectors which are invested by us or recommended by us, or the companies from those sectors which are invested. I would make a general comment that some of the companies from the or the some of the companies which are large cap may still be offering some value because the stocks may not have moved over there. So we may consider some of the sectors that we already discussed, for example, banking sector or PSU bank. Some of the companies are available. Cement is one sector wherein some opportunities are still there. May not be, uh, may not be from all the company perspective, but very stock specific within that sector may still be there. Or then not in general but sector, but we are very company specific also during this time. So and obviously I can't take the names, but we are very specific about companies as well while we are selecting. If they are not from, say for example, large cap or the sectors that I mentioned, then we are very specific about companies. So we are investing in those companies as well.
All right, sir. So Jiten sir, you have any comments to make on this, or although Nitin sir very well articulated all the aspects which you guys are looking at.
Yeah, I think has been covered as far as some of the sectors where we still think that there is opportunity, or there are some stocks which where very few stocks obviously where investments can be made are from the infra and uh, sugar sector. Two sectors are like uh, there could be some chemical companies also uh, uh, which basically there are certain special situations or something due to which they could be in downturn for some time, or in the near future, but valuations are attractive. And so again, it's a very very bottoms up approach. And uh, so yes, there are, I mean, fortunately one thing is that whatever could be the situation of the market, If you look hard enough, you will always find a few opportunities. So yes, the complaint is that those opportunities are becoming fewer and fewer and difficult to find. That's the only complaint. But yes, you're still able to find some opportunities in almost all markets. So you have to basically dig a bit deeper, research a bit harder.
Right, sir. Sir, although I tried my best to ask the maximum sectors which came to my mind, but apart from that, anything you guys had your in mind regarding the market outlook or maybe in general, so you can,
I think you covered almost everything. And Jiten talked about some additional sectors as well, like sugar and companies from chemical sector. So we covered everything now. Education is one sector, that is the publication, wherein I had looked at the changes which are happening, and I covered that on my timeline also on Twitter. Created a big thread. So NCF has now come. I was talking about it since 2021, and I was very actively, posting about it. Large thread was created with the hashtag NCF thread on my timeline. So that is happening now. Unfortunately, fortunately, there are not too many companies listed from the sector. Only two that I recall are listed, and only one is there which is having CBSC books. Second one is mostly into state board. So that sector would see some growth possibilities during next couple of quarters and years to come.